Hello student, we are in the chapter of rules of debit and credit. In this video we will check out traditional approach to accounting. So we will see how accounts are classified under traditional approach to accounting and the rules of debit and credit which apply to these accounts. So let's check out traditional approach to accounting. Now, what are the classification of accounts under the traditional approach? Under traditional approach, accounts are classified into A. Personal account and B. Impersonal account. Impersonal accounts are further divided into real account and nominal account. So basically, there are three types of accounts in traditional approach to accounting: personal account, real account and nominal account. Let's check out each of this. We'll start with personal account. What is the meaning of personal account? It refers to accounts of persons, individuals, firms, companies, debtors and creditors. So these are personal accounts, accounts of individuals, firms, companies, debtors, creditors, etc. Why do we prepare personal account? The purpose of preparing personal account is to determine the balance due from or to persons or organization. So in case it's a debtor, the purpose of preparing the debtor account is to find out the balance which is receivable from the debtor. In case it's a creditor account, the purpose of preparing the personal account is to determine the balance which is payable by the business to the creditor. Personal accounts are classified into, it could be natural personal account, artificial personal account or representative personal account. We'll start with natural personal account. Refers to accounts of persons who are creation of God. It could be Ram account, Shyam account, Sita account, Rashmi account, Mohan account, Sohan account, Lalita account, Geeta account. All these are natural personal accounts, accounts of persons who are creations of God. The next type of personal account is artificial personal account. So this refers to accounts of corporate bodies or institutions which are recognized as persons in business dealings. So it could be a firm, it could be a company, it could be a sole proprietorship. All these are artificial personal accounts. Basically, business entities are artificial personal accounts. Bajaj Limited account, Infosys account, CMR Sports Club account, Ram and Brothers account, Singh and Sons account, SBI Bank, Cashad Bank. All these are examples of artificial personal accounts. We are referring to business entities. The third type of personal account is representative personal account. It refers to accounts which represent a certain person or group of persons. Example: outstanding expense account, prepaid expense account, accrued income account and income received in advance account. So we are talking of accounts which represented a certain person or group of persons. So outstanding expense account refers to the group of persons to whom the business owes expense. The expense has been incurred but not yet been paid. Prepaid expense, we are talking of the group of persons to whom the expense has been paid in advance. Accrued income, the group of persons from whom the business is to receive money, income which is earned but not received. And income received in advance, the group of persons from whom the income has been received in advance. So these are personal accounts. Let's revise. Personal accounts refers to accounts of persons, individuals, firms, companies, debtors, creditors, etc. The purpose of preparing the personal account is to determine the balance which is due to or from the persons or organizations. Personal accounts may be natural person's account, that is creations of God, Ram, Shyam, Anita, Sunita, Advait, all these are personal accounts, natural personal accounts. Artificial personal accounts, we are talking of business entities. It could be Bata Showroom, Infosys, Reliance Industries. All these are artificial personal accounts. And representative personal accounts, the list is exhaustive. It consists of outstanding expense account, prepaid expense account, accrued income account, and income received in advance. It's an exhaustive list. Next, let's go to impersonal accounts. It refers to all accounts which are not personal. So accounts which are not personal is called impersonal accounts, and impersonal accounts may be real account or nominal account. Let's check out real account. Real account refers to all accounts which relate to tangible assets and intangible assets excluding debtors. So as we've already seen, debtors is a personal account. So real account refers to accounts of other tangible and intangible assets. A tangible asset is an asset which has physical existence. That is, it can be seen and touched. However, an intangible asset is an asset which does not have physical existence. It cannot be seen and touched. What are the examples of tangible assets? Land, building, plant and machinery, stock, cash in hand, etc. Examples of intangible assets: goodwill, patents, trademarks, copyrights, etc. What about nominal account? It refers to accounts of expenses, losses, revenues, incomes, gains, etc. Example is purchase account, sales account, salary account, wages account, rent received account, discount allowed account, and discount received account. So purchase account is an expense account, sales account is a revenue account, salary account and wages account is expense account, rent received is income account, discount allowed is loss account, and discount received is gain account. Let's check out the rules of debit and credit to the personal account, real account, and the nominal account. For personal account, the rule of debit and credit is debit the receiver, credit the giver. For real account, it is debit what comes in, credit what goes out. And for nominal account, it's debit all expenses and losses and credit all incomes and gains. So these are the rules of debit and credit which apply to the accounts that we've just learned. So we've seen traditional approach to accounting, the classification of accounts, as well as the rules of debit and credit to each of these accounts. In the upcoming video, we will see a few example sums based on traditional approach to accounting.